Hi traders, Chris Weston here, Head of Research at Pepperstone. I'm previewing Nvidia's quarterly report, which comes out in the aftermarket on Wednesday. Just after the market close, they should hit us with the numbers, and the market is certainly expecting some volatility, not just necessarily at a single stock level, but also into some of the other AI plays, Broadcom, Marvell, AMD, also into the QZTF, and also at an index level in the S&P and NASDAQ as well. So one to be very much aware of. If you're not trading US 24-hour share CFDs with Pepperstone, do reach out to the team and find out more about that situation, because you'll be able to capture the earnings and react to the earnings move and what's been said by Jensen Huang in the aftermarket trading session as well. And there's a continuous price that goes through Asia. So if we do see any interesting flows or movement coming through, you'll be able to react and capture that situation as well. Now, as I say, markets are conditioned for movement in Nvidia's share price and earnings. If you go back over the last 8 quarters, the stock has essentially moved by about 9.2% on the day. Granted, that was skewed towards 3 different quarters, but the market has seen some big moves in the share price. If we have a look at actually what's expected for this earnings, the options pricing is suggesting that we could see a 7.4% move on the day of earnings, up or down. Given that they've got a $3.4 trillion market cap, that would equate, if that move was to be realised, at about 40-50 basis points in the S&P futures in the aftermarket, a little bit more in the NASDAQ as well. So as I say, the market is expecting some big movement. Now, in terms of positioning, probably one of the best ways to look at that is in the options market and through skew. And we can see that 1 month Nvidia puts are trading at about a 1.9 vol premium to where calls are at the moment. So that's pretty balanced. If you have a look at the chart there, you can see that that's running in pretty much an equilibrium. And I think that speaks to a market in terms of their positioning. They're certainly not, they're seeing the risks on the day of earnings as fairly symmetrical in that situation. Now, of course, we traded down to about $113 at the beginning of February. Obviously, people were a little bit concerned about a number of factors playing through. And we have hit some valuation support. I know a lot of people don't necessarily look at Nvidia in terms of valuation, but I think that has been coming. That valuation support has become a little bit more pronounced, and a lot of people are talking about it. We did see the shares at that point trading down to about 23 times forward earnings, and we did see rotation at the time coming out of some of the ASICs plays like Broadcom and Marvell, which were trading very expensively at the moment. So look, we've come down and we've seen some switching back into Nvidia, and we've hit this kind of multi-year trough in terms of PE multiples, which is supporting the stock. And what we've seen is the stock having a nice melt up about 20-25%. Back to where we are at the moment, about $140. We've closed the gap that we saw on the 27th of January, and we're now just trading sideways. And I think that's the trade that we're going to see going into the earnings on Wednesday, is the market just consolidating, not really prepared to do too much, and we filled that gap. What happens from that point is going to be very interesting. Now, what are we watching for on earnings? What could move the share price on the day? Well, of course, if we have a look at go back to where we were on the 3rd of February, people were looking at the guidance that they gave back in November for revenues of about $37.5 billion, give or take 2%, and margins at 73.5%. I think at that time the market was saying that you're probably going to get those margins, you're going to get those revenues, but certainly it's going to be there kicking and screaming, and it's going to be a case of just about getting through the goalpost there. I think now that the market's moved up to $140, they're saying that there's a very good chance that we're going to beat those earnings. I think the fact that they're still selling H20 chips in China and H100 chips is very much that the idea that some of the Chinese buyers are probably front loading some of those quickly into their situation, given that the potential controls that are going to come from the Trump administration, and that should boost some of their revenues coming forward. Of course, these H20 and H100 GPUs are using the Hopper infrastructure in that situation. So I think the street at the moment, or certainly the sell side, the investment banks are peddling a sort of a consensus this quarter on revenue of about $38.2 billion, and they're expecting them to then come out, Nvidia to management, to guide for the quarter ahead of about $42 billion. This is also a gross margin story. I think the guidance they previously gave was for gross margins around 73.5%. I certainly think the market wants to see something that suggests that those margins have troughed and they could actually tick up going forward. So if there's anything that suggests that, I think the share price could have a nice rally. Conversely, I think they'll probably need to get revenues of about $39 billion to please the market and push the share price through those recent highs and into 150. I will note that there's a big gamma level around 150, so if we can see the share price push through that could perpetuate the move up a little bit higher. And I think they also probably need to guide to around sort of $42.5, $43 billion for the period ahead, and I think that would certainly please the market. We're also still looking for any kind of rhetoric around DeepSeek. we'll see what happens there and how that impacts the business, how their GPUs, have work both in training and also in inference, and anything that suggests, they're looking at what's happening in controls, any kind of defined outlook about how that could potentially impact, although that's a low probability. Now, I think the share price has obviously two-way risk, but people are expecting movement, so that could be an interesting one for traders. Bear in mind that after this situation, we will get the GTC conference playing through, so I do think any pullbacks in the stock will be well supported, especially with that valuation support, again, for a nice run up into the GTC conference that comes through in the 17th to 21st. So for my trade on this, is any kind of disappointment, depending on what that disappointment looks like, I think you look to buy the weakness, and then we look to a nice melt up into GTC there. Trade at Pepperstone.